Um, I operate out of the US, and the reason for that is because the capital is here in the US. So the question that I asked about how difficult it is to access capital for companies in India that are actually raising capital from Indian venture capitalists and private equity investors, I think we've actually solved that problem. So the way to do it is through game theory. You sit in the United States and you invest in India, right? So you kind of circumvent the problem by thinking about it creatively. The second thing is that I've also been a professor at the University of Massachusetts at the Eisenberg School, where I taught a class in venture capital and also in sustainable startups. So a lot of the questions that I'm going to be asking Punit are based around, like I said, the real questions that I asked him and some really, really interesting things. BlueSmart, by the way, before Punit goes and talks about himself, is known as the Uber Slayer. So think about it, right? It's the Uber Slayer in India. And Uber had a very, very long lead. It was the Goliath, in the market. And here comes BlueSmart, a small company, a startup that didn't start too long ago, and actually causes, Uber and Ola, which is the local equivalent of, Uber, to redefine its business model. So think about the challenges that I'm actually going to bring up and the framework that I use and what BlueSmart founders have used to actually take on a behemoth and cause the behemoth to basically change its business model rather than trying to be the second or third player in the industry, right? So with that said, Punit, thank you for joining us. Why don't you give everyone your introduction and then we can start.
Hi, Sandeep. Hi, everyone. I hope you can hear me. I can't see everyone, but I can see Sandeep for sure. So thank you so much, Sandeep, for inviting me to this conference and Agam team for inviting me. Hi, everyone. I've been a serial entrepreneur in the clean energy space, in the renewable space. I've started 3 companies, which were the first one was manufacturing panels. I used to manufacture solar panels between 2008 to 2012, and then shifted gears to become an independent power producer, and set up 2 companies which built out 2 solar plants. So the first one, the second company actually, it built out a 20 megawatt solar power plant asset in the state of Gujarat from 2012 till 2014, ran that for 2 years and sold off that company, my second venture. And my third venture was again a joint venture with one of India's largest wind turbine manufacturing companies, Suzlon. So we jointly built a 70 megawatt solar power plant. So in these 10, 12 years, I invested close to $150 million in the solar space and then sold all my ventures. Before starting BlueSmart with my co-founder Anmol, who is also the founder of Gensol, which is one of India's largest energy services companies with a market cap of close to about $0.7 billion in India on the Indian Stock Exchange. My journey obviously largely has been renewable energy focused and energy and infra focused, but how before Sandeep and I get on and start sharing, how I'm just giving you a genesis of how we're thinking at BlueSmart. So at BlueSmart, we're trying to build an energy, infra, and mobility company in alphabetical order. And I was in the US, in fact, Sandeep there, all you guys are there. I was in the US all through 15, 16, 14. My wife was studying at the Wharton Business School in Philadelphia. I was traveling a lot all over 13, 14, and then 15, 16, 17, a lot. Every year, probably 6, 7 times in the US. And in one of my such visits, I chanced upon a meeting with the Hyperloop guys in Nevada, in California. And I chanced upon a meeting with Brent Kalanickis. He was at some time the CFO of Uber between 13, 14, 15 circa. And when I met him at that time, he was the CFO of Hyperloop One. He was also on the board of Baidu, on the board of Philip Van Housen. And previously, he was chief accountant and chief treasurer at Google. Prior to that, he was EA to Bill Gates. And it was just a chance meeting I had with him in Nevada that led to the founding of BlueSmart, and the founding tenets were written after my meetings with him. But yeah, so that's the relation to the US. Had I not been to the US and not met Brent, who was obviously spent 3-4 years building Uber, I that would not have I mean, BlueSmart wouldn't have been found. So that's just the context I wanted to set out. All over to you, Sandeep.
Thank you. So Puneet, why don't you tell us, when you decided to enter into and revolutionize the ride-hailing business, what went through your mind? There were already two major, deep-pocketed first movers, and with global balance sheets, especially one of them had a global balance sheet, the other one had a local balance sheet, which was very strong. Almost intimidating for somebody to get into a business where there are two very large incumbents with a huge brand recall. So why did you decide, and what sparked the idea to kind of revolutionize the ride-hailing business of all businesses?
Yeah, absolutely. I think the opportunity was massive and is absolutely continues to be massive. I think the entire industry, which is ride hailing, is just a 10-year-old industry, it's just a decade old. I mean, 10 years back, Uber was founded in 2009. Ola in India was founded in 2011 and Lyft was founded in 2012. I think these are largely just a decade old uh, players, competitors. And I think over 10 years, there was no major revolution that happened in the ride hailing space. Largely, if I look at ride hailing, which was started in the US, is more of an asset monetization platform or Airbnb of mobility platform where you have assets on the road. I mean, US is one of the largest automobile markets in the world. The automobile market in the US is about $2 trillion, which is half of India's GDP. And there are about 750 odd cars per thousand people in the US. And if I look at India, which is a smaller automobile market compared to the US in terms of four-wheelers and probably one of the world's largest in two and three-wheeler space. But in terms of four-wheelers, we see that the asset ownership in India or the car ownership is about just 40 cars per thousand people compared to our neighbor, which is China, which is a similar economy and obviously much larger, but still they have about 275 cars per thousand people. So our thought process was back in 2018 and continues to in fact get validated with each passing quarter and each passing year, is that models like Uber, which were Airbnb of mobility, will not be able to really scale or build upon this thesis in India, given that the asset ownership or the car ownership is really low here. So that was one. And that actually got validated post the pandemic and and we knew what was happening in 2018 that led us to start BlueSmart. Second, we saw a huge push from global governments and the Indian government that decarbonization was a big theme and now it's become even bigger. And this push for decarbonization will ultimately lead to EVs coming on the road or hydrogen powered car coming on the road. But platforms like Uber were not designed for that, right? So they depend on driver partners to bring cars on the road, and they were not adequate EVs or EV charging stations on the road. So we thought Uber will really struggle to build on a EV or a fully electric ride-hailing service in India, and they need tons of help. And BlueSmart can come of use, right? So, how we look at this problem is in India, people come from really poor sections of society, and they don't want to buy cars, right? Everybody wants to have a good quality of life. So fundamentally, our thesis is that drivers are not Macquarie's or not JP Morgan's or Fairfax's of the world, right? They are not BlackRocks or Blackstones. They just want to have a good quality of life and they want to focus on their core skill set of driving. So, and drivers had to bring cars, right? And then earn from it. So we thought, okay, let's decouple the driver from asset ownership and let let BlueSmart be the platform which brings assets on the table, unlike Uber, which expects drivers to bring assets on the table. So we institutionalized the entire supply side, which Uber was not doing. And we knew that that was the only way to go big and deep and wide with EVs. So what we did on the supply side innovation was we went to large DFIs, development financial institutions, who were investing in solar projects and wind projects, and we told them to invest in EVs as an asset class and give it to us so we can bring it on the platform. We started creating inclusive and equitable economic opportunities for driver partners, allowing the driver to earn a good quality, to earn a good income stream and have a good quality of life on our platform without the stress of asset ownership. So that was the supply side challenge on the driver side being solved. And what we saw in 2018, in fact, it's just getting validated with each passing year, that the consumer experience was getting battered, was absolutely beaten in India. There were massive challenges on ride denials front. When we take an Uber in London, or we take an Uber in the US, in New York, or in LA metropolitan area, or in SF, or in San Jose, it's a very different experience, or in San Diego. But when we take Uber in Delhi or in Bombay or in Bangalore, the experience is really, really different. And drivers are really fatigued, they're really fatigued, they're really, really tired, the cars are really dirty, the entire consumer experience is very low. And we wanted to significantly elevate the consumer experience, and we figured out that the biggest challenge, the roadblock, was the driver itself. And if we decouple driver from the asset ownership, and we take control and ownership of the asset and the upkeep of the asset, that will significantly improve customer experience. So we also launched two industry first features, uh, which were ride denials, zero ride denials from our side. We also said, let's say stop to search pricing. We should absolutely limit search. We should have transparent pricing, similar to the way all transportation departments or platforms work. The Tube of London or Subway of New York or Delhi Metro, they all are transportation platforms, and very structured ones. And they all have a stationary or fixed pricing structure, but they don't have really, any volatility around search. And so these two industry first features of stationary, transparent, fixed pricing structure, and the second being no search, no right denials. These were really industry first features for consumers, and we saw millions of customers shift over the last 5 years from the platform of Uber to BlueSmart. But the interesting part is we didn't want to do it all by ourselves, and we needed Uber's help. So the grand idea, or the idea 1.0, was let's partner with Uber. We know that they will really struggle to go the EV way or the zero emissions way, given that their business model will crumble. So we partnered with Uber in phase one of our journey. In Jan 19, we launched the first 70 cars on Uber platform, and we had 2 or 3 charging stations. Cut to now, we have about 6,000 EVs, which is the largest in Southeast Asia, and we have about 4,500 charging stations spread across 1.5 million square feet, which is also the largest in Southeast Asia. But that time, we had just 70 cars. So we partnered with Uber, and we launched the BlueSmart service on the Uber platform, and that to 200 cars and to nearly 300 cars. So at one given point of time, BlueSmart operated 300 EVs on the Uber platform. And so in a layman language, if you summon an Uber, BlueSmart will come pick you up. And customers are really surprised at why a BlueSmart branded car is coming and picking us up on the Uber app, where there's no BlueSmart branding on the Uber app. And in India, I don't know if everybody is from India, I can't see the crowd, but in India, the Uber cars are just white color cars, which are Swift Desire cars, and some kind of Maruti cars, really low end, low experience cars. So it was very different for people to experience a branded electric ride hailing service now being available on the Uber platform. The experience could be as different as you booking a Malaysian Airlines flight ticket and a Singapore Airlines coming to pick you up. My apologies if they are Singaporeans or Malaysians in the room, but if you would book a Malaysian Airlines ticket, and just imagine a much high experience coming to you, Singapore Airlines flight coming and picking you up. So the experience was absolutely different, and consumers just loved it. And we had this tag inside saying that we are launching soon, our app is launching soon. So we graduated from the class of Uber. We are actually Uber class of 19. We said Tata bye bye to Uber in December 19, and we launched our own app. And since then, we have been scaling on our app only. So we scaled from 300 odd cars to now 6,000 BlueSmart EVs. We have traversed, completed over 400 million or 0.4 billion electric kilometers on our own app. And the only two reasons consumer love it is that because we are reliable, and because we are reliable. So we are the most reliable ride-hailing service in India. We don't cancel rides. It's an amazing 5-star or 4.9 out of 5-star consumer experience. Every ride of the consumer is almost 4.9 or 5-star. The consumer just love us. And on the supply side, we have figured it all out. We've figured it out that the weakest link in the system is the driver, and we should not be dependent on the driver to bring any assets on the road, and we should probably depend on people who have the capability to bring assets on the road. So that was truly differentiating on the innovation front. It was like Sandeep mentioned. Now Uber is actually copying us in India and trying to rewire or probably go the BlueSmart way, partner with small asset managers who could potentially buy some EVs on deploy on the platform Uber. But that's only one part of the problem. We also knew when we were starting that this is not a mobility business. And if people think this is a mobility business, then maybe probably they don't know BlueSmart well, or we are not able to tell our story well. This is an energy, infrastructure, and mobility business in alphabetical order. So, because Anmol and I had zilch nada, zero experience in mobility, zero experience in transportation, we never saw the business as a transportation or mobility business. We thought our core skill set is energy and infrastructure. So we'll build on our core skill set. We are looking at this business as an energy, infra, and mobility business. And without charging infrastructure, nobody in the world can operate EVs at the scale we are operating. I mean, we had this privilege of hosting Anthony Tan. He's the founder of Grab. He runs a company called Grab in Singapore. He's Harvard MBA class of 11. And I've been writing to him for quite some time. So he was kind enough to come and pay us a visit. We spent half a day with Anthony. And he said they exactly echoed the same thoughts that if you don't invest in EV charging infra at large scale, you can't probably run such a massive EV ride hailing service. And this is what we set out to do and we are doing. So we are building these massive EV charging super hubs where we park and charge our cars. And that's how we are able to scale this EV ride hailing business. We believe that businesses ride hailing and charging today can't be built on siloed principles. We have to have an integrated, vertically integrated business model of charging infrastructure, which is today for BlueSmart, and tomorrow can also be used by others. So what we're building is a large ride hailing business, which is becoming an anchor tenant to the charging infrastructure business. The charging infrastructure business is becoming the bedrock on which the ride hailing business is scaling. And that creates a BlueSmart virtuous cycle. So we build out a charging super hub, we bring EVs there, we achieve optimum utilization or capacity utilization in the charging infrastructure. Then we build another charging hub, we bring more EVs. And that creates a virtuous cycle. And that's how we have been running. But yeah.
Yeah, you addressed the chicken and egg problem, which is obviously you can't build out a commercial fleet of four-wheelers unless you have access to charging infrastructure. And you can't effectively build out a charging infrastructure until you know that you have a commercial fleet. So you solve that problem. But from a purely scaling up perspective, your model is very different, which is that you own your cars. And if you look at Uber, it's a technology platform that actually matches the owner of an asset to somebody who wants to use the asset. How is it that you've been able to scale as fast as you have using an asset heavy model rather than an asset light model?
Absolutely, Sandeep. So how we are again viewing this business is absolutely you're spot on. See, Uber again scaled in a market which is the US. If I were to read Uber's balance sheet correctly, and I've been reading their balance sheet for the last 6 years every quarter, and even if you see their current balance sheet, largely they're a global ride-hailing service, but nearly 72% of the global quarterly revenue comes from just two markets, which is the North American market and the South American market. And the North American market itself contributes nearly 64% to Uber's global quarterly revenue. And largely, if I read their balance sheets over the last 30 quarters or the last or the last, say, maybe 6, 7 years, I see largely that Asia Pacific is the smallest contributor. And that again then validates our thesis that the asset ownership, car ownership in Southeast Asia or Asia is pretty low on the lower side. And also Australia, I would add. The APAC region normally contributes anywhere between, over the years, between 12 to 14% to Uber's global quarterly revenue. And India, as a standalone country, contributes nearly 2.5, 3%. And largely that revenue again comes from two-wheelers and three-wheelers. Cars contribute the least. And actually that validates the thesis that adding cars in India for Uber was very difficult. They had a very painful period over the last 10 years in India, or 9 years in India, or 10 years in India. I think they just completed 10 years in India. And that was on the back of doling out driver incentives. So Uber probably spent nearly $2 billion in India, including Ola, they spend about 3.5, or maybe nearly 4. So between them, about $6 billion as incentives for the drivers to bring assets on the platform. And post the pandemic or kind of pre-pandemic, they stopped giving out incentives. A very important event occurred, which was the lifting of Lyft on the US stock exchange in Q4 CY 2018. They became the first ride-hailing company in the world to get listed on any stock exchange. And then obviously Uber got listed on the US stock exchange in Q1 calendar year 2019. And after Uber got listed, they figured it out that they have been really burning a lot of money in India by investing in getting drivers to buy cars, and they don't want to do it anymore. So they completely dropped the driver incentives from Q1 CY 2019 onwards. That is when we had just started. And we figured it out that it's about time they're going to shut shop in terms of bringing drivers on board and paying their incentive. And then COVID happened, which actually was nail in the coffin for Uber. We had thousands of cars which went off the platform of Uber. And that was a golden moment for BlueSmart, although it was a very bad moment for humanity and society. And we knew that these were very challenging times, including for BlueSmart and everyone. But that validated our thesis that we knew that you can never ever scale and build a ride hailing service depending on the people from the weakest section of the society. And that's what we set out to do. We knew that the only way to build is an asset heavy company, and energy infrastructure business is an asset heavy business. So we will give key emphasis and key focus on building the energy and infrastructure required for EVs, and then we will also own EVs. So how I am viewing it, or BlueSmart is viewing this business as an airport airline business. So imagine we owning Changi Airport and we have our own airline, which is Singapore Airlines, which is a national carrier. And same thing with the UK, you have Heathrow Airport, and then you have British Airways as a national carrier. Or in India, you have the Delhi Airport, and you have Air India as a national carrier. So the national carrier can become the anchor tenant for the airport to become viable from day one. And after that, you can open the airport for all airlines to operate. And then that's how airport becomes profitable in the long run. So we thought, okay, we will build out this massive EV charging business, which is like airports in the airline terminology. And we will build a profitable ride hailing business by using EVs. And we don't mind owning it because we just have to pay lease for it. So we don't own any of our cars on our books. We have leased out assets from leasing institutions. These are global institutions who have the ability and capability to invest in thousands of cars. So today we have already secured financing in the bank for nearly 25,000 cars. We have secured $250 million of EV asset financing, and maybe one or two big names that Sandeep's aware of. I can't name them on the platform. With them coming in, we'll probably raise $500 million in EV asset financing. So we are pretty secured on our EV supply side. And this founding tenet has really been validated. On the charging infrastructure front, we have to build out the charging infra. We have to do the capex. So we chose this path of doing the capital expenditure, but that's giving us returns also. This capital expenditure is the reason by which we are getting these profitable returns. Our charging infrastructure business is today profitable, is EBITDA positive. The ride-hailing business, we have some burn there, given that we have not achieved the right scale. Once we reach 10,000 cars, probably we'll break even on all our fixed costs, the operating costs, and the soft costs and all the operating costs. We are breaking even. We are covering all the variable, semi-variable costs. But certain semi-fixed and certain fixed costs, we are probably going to break even in the next 3 or 4 quarters. But actually, we are reaching there that we are able to do that. Uber now completes 10 historic years of operating in India, including the balance sheet that they posted on the website, available for everyone to read post this session, which they posted on 9th of Jan, still shows a loss of close to $80 million for the financial year last year, despite being operating in India for close to 10 years. So we fundamentally believe that a business which is totally dependent on third-party drivers, third-party customers, which you only doing matchmaking or probably Match.com or mobility, this Match.com or mobility concept won't work out in markets like India. And you will need to think through on a differentiated supply side and a differentiated customer value proposition if you were to rebuild mobility the way we are thinking about.
Understood. So just taking that point a little bit further, your moat is really going to be your charging infrastructure. How are you going about doing the land grab? Because India is extremely dense. The places where you operate are metro cities. If you look at the centers of these metro cities, there is no land available to build charging hubs. How are you going about, from a strategic point of view, building out the required charging infrastructure, especially if you want to own it and you want to bring all your fleet overnight to get charged so that they're ready for the next day to get operated by your drivers, where are you finding the land? So that's one question. And secondly, also for the audience, it would be very interesting because there's been a lot of literature that's been put out that says that it does not make sense for electrical four-wheelers to operate in India, and that really the EV market in India is driven by two-wheelers and three-wheelers, because if you look at where the use case for EV two-wheelers and three-wheelers is today, it's used largely for last mile. And you have a lot of asset sweating that happens. So your cost savings per mile or per kilometer is more than enough to compensate for the upfront cost of migrating from an ICE-powered two-wheeler to an electrical two-wheeler. However, if you look at most people who are actually buying four-wheelers today, the upfront cost that you actually have to pay to migrate from an ICE four-wheeler to a EV four-wheeler, and then having it parked the entire day in your office and not having enough asset sweating is not going to actually lead to an economic incentive for people to migrate. So you're actually changing that thesis completely, because you're saying that four-wheelers work in India if you have a commercial use case for it. So can you comment on that as well? So both these points are very, very important to your business models. Can you elaborate on those?
Absolutely fantastic. I think these are very good questions and very relevant. We keep getting these questions day out by investors. We continue to get investors continue to ask these questions. So I think on the charging infrastructure front, so it's the first mover advantage. Again, how we are thinking about this business is, I think probably give you an example. When I was in the US, I used to see that Starbucks and McDonald's, they had prime locations. Also, Chipotle at some places, they have prime locations. But largely, if you see, Starbucks is not a food company; it's more of a real estate business. You end up going at the prime location, and you find that area, and there's a Starbucks right there, and you'll go and you'll have a coffee, even if you're not, even if you're not wanting to have coffee. But with all the advantage they had in the US, they kind of missed out on the UK story or the London story. In London, you'll see Pret has the advantage. So the advantage that Starbucks had in New York or had in SF or had in LA or had in the US, they kind of missed the story in the UK or in London. Pret was faster. They got all the prime locations. So you don't go to a Pret store in London to have a muffin or a croissant. You walk into a Pret store just to buy a bottle of water because you see Pret everywhere, right? And we thought if we apply the same logic and we build out charging infrastructure everywhere, not only it'll be easier for the BlueSmart cars to then go back to the charging super for getting charging and parking. And tomorrow when the cars are out doing business, other cars can come in the same areas for finding parking and charging. And what we continued to do during the pandemic, when the world was sitting inside their homes and probably thinking the world is coming to an end, we were building charging infra. So we didn't stop working. At that time, we got one of the best land deals anybody could have thought of in India. We went and got the best sites because people thought this is the end of the world. And so we got a lot of cheap sites for long periods. So we went and probably kept our handkerchief at all the prime locations in Delhi, NCR, and Bangalore. And we got the best localities at the best locations. And obviously, when the pandemic opened up, we continued to negotiate really hard. And because we are now moving fast and we are creating value for the developer or the partner, we are partnering with real estate organizations, complexes, shopping malls, a lot of places where we are obviously creating an additional revenue stream for these places where we are creating charging and parking. Also, the bigger challenge is that you may find places or areas, Sandeep, but you can't find load or power load. See, a shopping mall was not designed for 200 car parking for an EV, right? So each EV has about 22 kilowatt peak power requirement for charging. So if you have 200 cars standing, you need about 2 megawatt of excess power load. And the mall was not designed with that additional 2 megawatt power load or 3 megawatt power load or 4 megawatt power load. So not only we have to find land, we also have to bring in the power connection. And we fundamentally absolutely agree with you that all cities or mega cities were not designed for EV adoption. So there are massive challenges. Challenge number one, finite locations. Challenge number two, finite prime locations. Challenge number three, locations but no power load. So we have to do energy plus infrastructure and create energy infrastructure. But after we create that, then somebody has to utilize it, and probably then you need mobility. Hence, I said in alphabetical order, it's probably a three-step challenge. And hence, companies like Uber or Ola, which are software-only platforms or software-only intermediaries connecting a customer side, buy side, and sell side, and buy side, they were never designed ground up for this kind of EV adoption. And obviously, they're never going to. I think the EV manifestos or the EV mandates of these behemoths will not be really fulfilled because largely they're dependent on too many pieces of the puzzle. They're depending on charging infrastructure, somebody doing charging, somebody doing ride, somebody bringing the car on the platform, somebody getting power connection, somebody figuring it all out. And after doing that, also availability of all that on their platform. So it's too challenging now, I think, in this world for Uber India or equivalent platforms to probably do. So that's the piece we are solving for the EV charging infrastructure piece. Given that it's a full-time business model, full-fledged business model, we're not building the charging infrastructure just because BlueSmart needs it. We are building the infrastructure ground up because we believe that we have a massive opportunity for third-party charging. But for that to happen, today we need BlueSmart's fleet underwriting the demand with a capital D and becoming the anchor tenant today. But we don't need that for eternity. This same charging infrastructure that we built out, and we have about 39 hubs spanning across 1.5 million square feet at prime locations. This is for everyone else when we open it. Also, keeping capital consistency and preserving it, also not doing everything out by ourselves. We have also partnered with some other behemoths. So we have partnered with some other energy infra companies like GeoBP in India, Reliance, which is also building some charging hub for us, but also not as aggressively because that's not their main line of activity. They're dependent on BlueSmart to consume those charging hubs. So they have built out about 5, 6, a bunch of 6, 7 hubs for us, but largely 85 to 90% of all hubs have been built and designed by us because we are consuming it ourselves, and then we are going to open it to third party. On the second question of the unit economics around the
Yeah,
viability
especially
of
I brought
two-wheelers.
that up specifically
Yeah,
because, like you said,
yeah,
the financing of these four-wheelers is actually happening by third parties. And
yeah.
your payback period on a two-wheeler is much faster than your payback on a four-wheeler. So what is their economic model? Why would they be incentivized to buy these four-wheelers and lease them out to you? How do they get,
Yeah.
how are you compensating them? What's their payback period? What's their economic model?
So look, I mean, no doubt about it. India is one of the largest two and three-wheeler manufacturers in the world, and also consumers. And the EV adoption largely will be driven by two and three-wheelers in India and Southeast Asia, given that the market needs that. You see, India has a population of 1.4 billion people, but despite such a big population, only 40 cars per thousand people kind of exists in India, despite the massive GDP growth and all that economy boom that is happening. India is one of the fastest growing economies. The car ownership continues to be really low because majority of India believes that two and three wheelers are economical and they are viable. And also the cost of two and three wheelers are pretty low. So people use two and three wheelers for shorter distances. This is a great India tier 2, tier 3, tier 4, tier 5, tier 6 story, which is fabulous, which is in middle India, central India, etc., etc. But if you look at the larger cities, which are equivalent to or bigger than London or New York, or equivalent in terms of size and capacity. If you look at Delhi, or if you look at Bangalore, or if you look at Mumbai or Hyderabad, between these four cities, nearly all the population of, or half the almost 70% of US population resides in these four cities, right? So these are massive mega cities. I think these are countries and not cities. So Delhi NCR has a population of 72 million. And I mean, I think Ukraine's population, I don't know if I'm wrong or right, but Ukraine's population nearly 44 million, and Spain's population is 46 million. So you can fit in probably 1.7 Ukraine or 1.6 times Spain in Delhi NCR, which is just a city and some surrounding cities, right? So these are huge cities. And my fundamental thought always has been, how can you travel 40, 50 kilometers on a two-wheeler? It doesn't make sense, and in this heat and this weather, which is terrible. So I think four-wheelers are great all-weather options, and nothing to compare with four-wheelers or metros. So I think these are sound transportation options. Now they have to go electric, and look, it's very challenging to for them to go electric because the costs are high. Sandeep is spot on. But then came two people to probably change that. First one was Government of India, and the Government of India realized that public transportation in India is in a very bad state, and we should do something about it. So they came up with this policy called FAME, and under the FAME policy, it stands for faster adoption of electric manufacturing of EVs, and they came up with this policy to subsidize the cost for the car and for the bus, and they gave out certain subsidies which were really helpful for companies like BlueSmart. So we got a huge benefit of about 10-15% in the car cost was written off by the government of India, and when they paid for it. So that was a huge tailwind for us in 2020, 2021, 2019. And I think now the FAME subsidy is kind of going away and we don't need it also. Second benefit that we had was also on the operating cost. So while the capex or the capital expenditure upfront looks seemingly little more, so I absolutely agree that if you have to spend $8 for a car, you are ending up spending now $11. Absolutely agree to what Sandeep said, and this is the right thing. However, if you operate the car for the next 14 months, your operating cost, which is your total cost of ownership or TCO in layman language, which is your capex, which is $8 plus another $6 for the car, your total cost of operation for that certain period will be about $15. However, that the operating cost for EVs for the same period will be just $3. I'm just probably just breaking down to unit economics right now. So in 14 months, you will equal the cost of the additional capex that you spent in terms of using an EV compared to an ICE car. So in 14 months, we are squared in terms of capital cost because of your lower operating cost, and then it's game on. For the next 7 years, because we fundamentally believe that EVs have life one and life two, for the next 6-7 years, the EVs or EV or four-wheelers powered on electric vehicles will day in, day out beat the ICE car in terms of operating costs. And that's money in the bank. And that's the reason we chose EVs as the entry point to enter ride-hailing business to take Uber on. So that's thesis one. Second is the life of the asset. Now, life of the asset is only limited in terms of ICE cars. So beyond 250,000 kilometers, an internal combustion engine car probably done, and you need to probably junk the asset. But EVs have life too. You just have the motor, you change the battery, and you probably invest in another 20% of the asset cost, and then you have life too. So if you plug in the life too, then the total cost of ownership is even better. Now, again, Sandeep is spot on when he said that these are not easy challenges for everybody to solve. And why you are not seeing EV adoption largely having, he's spot on, because EVs only make sense if you run them. If you probably keep an EV at home and run it for 10 kilometers a day, it doesn't make sense to buy an EV. Absolutely, it's better to buy a nice car because you are not ever going to recover the cost if you run it 10 kilometers a day. But as a cab company or a ride-hailing company or a public transportation platform, if you run the car for 200 kilometers a day, 6,000 kilometers a month, 72,000 kilometers a year, and you run nearly 200,000 kilometers over 3 years, absolutely makes sense, because in 14 months your money is back in the bank, and then you are probably beating the competition, black and blue. So it makes sense for all public transportation platforms, if I probably am correctly saying it, or others are saying it also correctly. All public transportation platforms, buses, cabs, your trucks, any long distance transport, which today is running, is burning money on fossil fuel. Today, the cost of gas in India, in Bombay or in Delhi, is equal to the cost of gas per gallon in New York. Probably difference of 7-8%, almost. But if you do the math, the cost of gas per gallon in the US, in New York, is almost similar to the cost of gas per gallon in Delhi NCR and Bombay. But the cost of mobility is 5.5 times more in the US and 5.5 times less in India. So how can you ever make money as a driver when you're paying for your raw material, your input cost being the same as the cost in the US, but your mobility cost is 1/5? So the GMV of Uber per kilometer or per mile is 5.5x of the GMV per mile they get in India. So Uber is not only surviving, they're actually burning money in India just to keep any car on the platform for incentivizing drivers. So we know that is loss, loss, loss everywhere. And the win-win can only happen if you shift to an EV, which they can't. And they are trying to do it with the help of one fleet operator, just one. But they're finding it very challenging because, again, on the charging infrastructure side, they're struggling. But we fundamentally believe that the sooner people figure out the math and they shift to using EVs on four-wheelers, the sooner they'll start making money. And that's what we figured out. So there's no doubt about the fact that every vehicle that moves beyond 100 kilometers a day should be an EV, and you recover the cost pretty quickly. So that's our thesis. But absolutely agree with Sandeep, given that India is one of the largest delivery markets, food delivery markets, consumer markets, a lot of shipments, logistics is all going on two-wheelers and three-wheelers, and they all are shifting to EVs. But it's quite surprising but India is one of the largest delivery market, one of the largest logistic markets. In that market, Uber Eats, which was their eat model or delivery model, they chose to exit the business and they sold it to Zomato. Given that, if I read Uber's balance sheet right, in the Q4 2023, 51% of their quarterly revenue came from delivery and logistics, and 49% of the revenue came from ride hailing. So the biggest business for them is delivery and logistics, and the smaller business for them is ride hailing. In India, they chose to exit that business. So for many reasons, I don't know, things are probably not happening the right way they would have wished
So what
for.
you're saying is
But
basically go long BlueSmart, go short Uber, right? You just put the trade out.
not really. I'm saying that there is a challenge in terms of strategy. Sometimes all the success doesn't depend on only how you execute the business. I think it's a mix of strategy plus execution. Execution is fantastic. Sometimes you can keep executing the wrong thing, and sometimes you can, have the great strategy and wrong execution. So I think the right balance between the right strategy and right execution more makes more sense. And I think while they are amazing at execution, not and that validates the fact that they have survived for 10 years in India, so they must be good in execution, but they are going somewhere wrong in strategy. So the right balance between just the right amount of strategy and just the right amount of execution is better than more of one of them.
Okay, we have about 15 minutes, and I'm mindful of the time that I want to actually give the audience an opportunity to ask you questions. And there's so much to talk about. Just a couple of questions that I'd like to ask you. There has been a lot of conversation that electrical ride hailing companies are truly not climate sustainable in that sense, because while they actually have an electrical car, they still depend on the grid, which is basically powered by thermal. And so therefore, there is still sort of, if you look at the net emissions, there's still an impact on the environment. You have actually very beautifully solved that problem recently through your partnership with the Tata Group, where you've decided to kind of move completely to a renewable source for powering your cars. So you actually have renewable power powering your cars, and then you have electricals. Can you talk a little bit about what that does for you from a interest among a wider range of investors, right? Some who may have challenged the notion that you were not truly a climate friendly play at the end of the day, so you are actually address that. And secondly, does the economics actually work out better for you by moving to that strategy?
You're absolutely spot on, Sandeep. That was always the vision. So when I was on the Google campus in Mountain View in California back in April 2017, I spent some time at the Google campus. And the first time I saw solar panels charging a charging station, and they were charging a Chevy Bolt car at the Google campus, and I was really fascinated. And obviously, in around Stanford, Palo Alto campus, I drove, Tesla. Then I saw some charging station which had some solar panels on it, and that was the thesis at that time in 2017, that we will have solar powered charging infrastructure powering EVs. And we always wanted to be a renewable energy powered company. So that was the founding reality. However, we could not execute on it given the pandemic came in between and there were too much to figure out on energy infrastructure and mobility. And we figured out that at scale it makes sense and not probably at such a small demonstration project level, and we didn't want to do it for optical purposes. We wanted to make sense. So we did realize that there's first, let's solve for scope 1 emissions and then we'll head to scope 2 emissions. So what we did was, look, EVs are net zero vehicles, right? They don't emit any emissions. So my notion is, my thought process is that EVs are the best way to decarbonize mobility in the city, right? So yes, there is some place, power plant, they're generating fumes and fossil fuels and burning fossil fuels and feeding into the grid. But EVs don't emit any further emissions. So you are not creating any further nuisance or any emissions in the city where people live. People don't live next to power plants. People live in cities. So EVs are not going to create any emission, right? So EVs are zero emission vehicles. EVs are also called as ZEV. So zero emission vehicles. So that was idea 1.0. And you are right. We knew that India is largely dependent on coal power. But that number's drastically changed. That number was about 95%, 97% dependency on coal power in 1991 when India opened its door for foreign investment. And that today in 2024, that number is about 68%. So 68% of India's entire power mix is today powered by coal. And in 1991, it was about 98% or something. So it's amazing improvement. But India has one grid, one nation policy. which in layman language means that you generate power anywhere, you feed to the main grid, and you evacuate power. And for that, you need scale to shift to renewable energy. So we waited to this point where we had demonstrated enough scale, and we have now signed a large power purchase agreement or an offtake agreement in layman language from a 200 megawatt solar power plant in Barmer in Rajasthan, where a company called Tata Power, which is the largest corporate house in India with $350 billion in market cap. Uh, so, so this company is now building solar assets all over India, including one in Rajasthan. We have contracted a small capacity of 30 megawatts initially to begin with, to draw 30 megawatt equivalent power. BlueSmart has a power load of close to about 48-50 megawatts in terms of all the power requirement at all the charging super hubs. We have about 160 megawatts of batteries under management in all our cars. So it's like a 160 megawatt solar power plant operating day in, day out. But the charging stations only have a capacity of 48 odd megawatts. So we have taken an initial output capacity of 30 megawatts that make us go green in a phased manner. So today, I can tell you in layman language that BlueSmart becomes the world's first ride-hailing and charging infrastructure company to have scope 1 and scope 2 emissions as zero. We have absolutely decarbonized mobility at scale. By end of this year, we'll be off taking more power from Tata Power, maybe from Renew Power, maybe from other power companies in India. And BlueSmart will ultimately go up to using 200 megawatt of solar power load in the next 2 years. So BlueSmart is the only company in the world which uses renewable energy or green energy to power its charging infrastructure to run EV. So for every kilowatt power we dispense from our charging infrastructure, we get equal kilowatt power from the renewable energy company in layman language. And that is absolutely, truly revolutionizing. And this was a question a lot of pension funds, sovereign wealth funds, who are evaluating us, looking at us, were asking us that in order to truly decarbonize, genuinely decarbonize mobility scale end to end for India's net zero emissions target to be achieved by 2070. This is what was needed, like what solar power plants are doing or wind plants are doing in the energy landscape. BlueSmart is doing and in the mobility landscape right now, directly from, like, you have fog to farm, right? So you have energy being generated from the power plant to being consumed in an electric car. It's a fantastic revolution. We ourselves had no idea that we'll achieve it, but somehow, with the help of the government and the right policies and all the tailwinds, we could achieve this. But in a market like India or even in the US, it's very difficult to achieve what we've achieved.
No, that's fantastic. You've had a number of firsts, and obviously provided all kinds of unconventional approaches to a ride-hailing business, which otherwise would not have made sense to anyone. And you've actually shown that thinking out of the box can actually make a huge difference. So we wish you good luck on that journey. We've got about 5 minutes, so I'd like to kind of open it up, and there's a bunch of questions. I'm going to kind of start from the left. So why don't you identify who you are first before you ask the question, and let's do about 4 or 5 questions in total. Punit, if you could just basically keep the answers short, because we want to kind of get a diversity of questions going.
Thank you. Max Rappaport, first year at Darden. I'm curious your thoughts about sort of upstream in your value chain, looking at the precious minerals that are involved in the batteries for EVs. Of course, I think the scarcity of these minerals is an issue. I'm curious your thoughts on whether you've developed a strategy or approach to sort of recognizing that cost might increase as the scarcity of these minerals increases as well. Thank you.
Thank you for the question. I think we've been beneficial for us. I think there's a lot of abundant supply available globally. In fact, in the last 2 quarters, the prices of EVs have really come down, given that a lot of Indian corporate houses are now also setting up gigawatt-hour battery plants in India. And with the PLI scheme, which is a production-linked scheme in India by Government of India, we're going to see an investment of nearly $10 billion of setting up battery plants in India, which is driving the cost down. So we have been beneficiary of much lower costs in the last 2 quarters. Our cost of our cars have fallen down by 8 to 9% because of the PLI scheme being announced in India and because of new battery plants coming up. Yeah.
Yeah, next question.
Hi. So thinking about the difference between being a mobility versus an infrastructure business, I think that drives to a question of sort of scale strategy. with mobility, you really want to look for that scale versus the infrastructure. You're sort of willing to sort of take monopoly positions on real estate, as you sort of talked about. What's been your sort of approach to scale, trading off between those two sort of approaches? Are you, really driving for that scale? And what sort of strategies have you found to be most effective in growing scale?
No, absolutely. Our strategy has been very clear. We're looking at building an infrastructure plus transport business, and these are the two hot sectors in India right now. Given that India's GDP is growing, we'll need tons of transport to unite India and to connect the moving, to move the GDP forward. Without transport, the country can't move forward. That's a great sector to be in. And infrastructure. India is just a $4 trillion economy, among the baby economies of the world, but the third largest in the world. And if we were to probably become the second largest economy and leapfrog to say $15 trillion, we'll continue still being the third largest, given that the first two are really miles away. But if India were to still scale from $4 trillion, $4+ trillion to now 15 trillion, that will happen only on the back of infrastructure investment. And the Indian government and also the likes of BCG, McKinsey, Bain, etc., they all have mentioned that India will need nearly $5 trillion of infrastructure investment over the next 10 years for us to genuinely become a $15 trillion economy. So we are absolutely banking on the infra push, and we are doing that. So transport push, infra push, combine it is the infrastructure transport business we're building. So I think our thesis and the time India is in is absolutely coinciding. And our thought process is that that's the only way to scale. There's no other way. We can't take the shortcut to scale the ride-hailing business. There's no magic wand that's going to happen. Nobody will build the charging infrastructure. Nobody will build businesses on siloed principles anymore. So we thought, okay, time for silo is up. We have to build a truly integrated and capex-heavy business, because that's the only way to scale.
Great. Two more questions. Yeah.
Hey, Punit. My name is Lohit, first year Darden, also a customer of BlueSmart. So, so my question is actually two-pronged, but relating to competitive advantage. So you said alphabetically it's energy, infra, and mobility, right? So let's club energy, infra together and mobility in one bucket, and let's look at energy and infra. There are a lot of companies, like big companies like Tata, etc., who are trying to create that jargons are there, like Universe, etc. Don't you think they would be able to create this infrastructure faster than you can? Tata Power, I know, is trying to build their own infrastructure everywhere, and the government trusts them too. That is on the infrastructure angle, how big players can compete with you. And the second one is on the mobility piece. Considering that the infrastructure is getting built and people are moving towards EV itself, won't this automatically shift, the mobility business automatically shift towards EV, where consumers and drivers start buying EV because the cost of the car is less itself, and the network effect will come in, and then the moat, then the uniqueness of BlueSmart might be difficult to understand at that point of time. What's your view on that?
Again, what we think is that, look, somebody who had to build out the charging infrastructure would have done it by now. And why these people are waiting is, again, the same problem that Sandeep and I mentioned. Sandeep questioned me on this, and that was his question 3 years back also, is that these people are not taking the big steps or the elephant steps because there is no guarantee of utilization, right? So they're not building large EV charging infra because they don't see utilization. And the utilization is only underwritten or driven by BlueSmart. Then there's too big a risk. They have a big counterparty risk that all the infrastructure they are building is just dependent on one large fleet. And for us, we see it as a unique opportunity that these companies can actually not be competitors, but be enablers to our growth. So we are very happy to partner with all of them. In fact, not to name them, I don't want to name them on the platform, but India's top 3 or 4 large corporate houses today are at the doorstep of BlueSmart, saying that let's sign contracts. We're willing to build out as much charging infra as you need. But we also know that they need us for driving that demand with a capital D, and tomorrow EVs will come and they may or may not need us. So we're using this time to build out adequate charging infra, and we have built out very huge capacities. The best part about it is that land is limited, load is limited, prime locations are limited. So we are going the Pret way. Starbucks may be a bigger company than Pret on paper, but Pret moves faster to build out those assets, right? So we are building out the key assets, which today we'll open up for third parties. In terms of other people shifting to EVs, nobody's stopping them. Like I said, that Uber is a sinking ship in India, given that the business model is crumbling. Uber is a great company globally. I think they're making tons of money in the US. If you see the balance sheet, they're globally profitable. In the US, they're profitable. In India, they're making losses because the strategy is wrong there. Ola actually is going somewhere other, some other space. They are now getting into manufacturing. So we also want some competition, and we have been waiting for some competition to come up. So we will appreciate if somebody comes up the BlueSmart way, because India needs much more than just BlueSmart. We're trying to do our best to provide India a unique experience. But just like the aviation space, there could be other airlines that could turn up. But BlueSmart, to summarize, is Indigo Airlines of 2006. Indigo started off in front of the mighty Air India, in front of the mighty Jet Airways with 10 aircrafts. Today, Indigo has 66% market share, 55% of the fleet size of India, and they have become the single largest airline in India by providing good consumer experience. BlueSmart's biggest moat is consumer experience and not actually the supply side innovation, not the EVs, not the charging infra. After doing all this, if we cannot win the hearts of customers, it's all a waste, right? So I would say none of these things are our moat. The only singular moat of BlueSmart is the 5-star customer experience, which Uber can never have after spending $2 billion. Ola never had after spending $4 billion. So the $6 billion went waste without customer patronage. And today, if you look at Uber and Ola, despite $6 billion invested, the patronage from driver side is zilch nada. The patronage from customer side is zilch nada. So that's $6 billion down the drain. We are investing in customer experience. We're not investing in energy, infra, and mobility or infrastructure. We are investing in customer experience. We're doing all this back-end engineering so the customer is happy.
So
Great.
let's do one thing. I think there were 3 hands up.
Yeah.
So let's ask all those 3 questions, and then Punit can just answer it in one go.
Okay, so we'll ask you all 3 questions together, and then you can answer it in one go. So what are the questions?
So first of all, Punit, I used your product in 2020 when it was just launched. Very good experience, and then I shifted here. But my question to you is from a customer experience point of view, like I guess drivers are ingrained part of BlueSmart business. It's not like Uber and Ola, which is a freelancing gig. So how do you maintain the driver experience? Because tomorrow your driver is thinking that I'll just use Ola or Uber, whosoever is paying me more, but they have to be committed in BlueSmart to be part of that success journey. So how are you thinking the driver piece?
The customer, driver retention
Yes.
is the question. Okay, next. That was, second and third.
Thank you for explaining the business model. So, this question is more regarding the operation. So, let's say in a hypothetical example, there are 10 people who are trying to book BlueSmart cabs, and there are only 5 cabs in that area. So, typically, search pricing is the mechanism to differentiate or self-select these 5 customers out of 10. But since you have a no search price model, and you can't deny service because you have a no denial service model as well. So how doesn't it mean that the wait times for the other 5 customers will be unnaturally long? I think this question becomes increasingly important as your operations or customer adoption rate outpaces your asset or cab growth rate.
That's an excellent question, by the way. Last question.
On my flatmate, Santosh's question here. It's on scale. So currently BlueSmart, I think, has around 4,000 EVs. And comparing to Uber, which operates, I believe, on an average 1 million to 2 million rides overall. So firstly, like, how is BlueSmart going to scale with an asset-heavy model? Like, are you going to keep leasing these rides, and are you going to keep going to institutional investors to invest money in cars? And secondly, as you scale, how are you going to preserve your customer experience? Currently, with low fleet size, it's easy to keep that 4.95 rating. But as you keep on 1 million, 2 million, or 3 million, and as India is growing, that probably the number of rides you need is really high. So how are you going to preserve that customer experience?
Fantastic. So I'll take the first question first. If I got it right, Sandeep, you can probably help me if I missed out. I was trying to make a note, but I was trying to also attend the call. So on the first question front, on the driver front, the drivers are really, really happy driving for BlueSmart, right? So they were waiting for a day that a company will come and ask them not to probably bring a car on the table. In the Uber world, you have to buy a car and bring a car on the table and then earn from it. So it's a two-step process. And you need to be a micro entrepreneur with a collar up, a rich driver who could afford to buy an expensive $10,000 car, figure out petrol or diesel or gas or CNG, whatever is available, and then drive on it. Now the cost of gas sadly has risen like anything. The cost of gas was nearly 46 cents per kg back in 2018. Is nearly $1.10 per kg now in India, which is now 90 odd rupees in Indian rupees. The cost of fuel in India in Indian rupees was about 60 bucks a liter, and now it's gone to be about 100 rupees a liter. So there's a substantial increase in the cost of gas, which is petrol and diesel in India, a massive headwind. The cost of financing in the post-pandemic world has really shot over the roof. With such two headwinds, no driver is really attracted to drive on the Uber platform. Unless they're working for the OBE or CBE or Padam Shri or Padam Bhushan Award, that's another thing. But no driver in terms of they don't need to go to Darden School of Business or Wharton to figure out the math. But they figured out that there's no uniqueness in driving for Uber's platform if you're not going to make money, right? So and you don't need to be an MBA for that. And drivers understand that. So that's the driver piece. On the consumer side, the challenge for platform only simple layman language platforms is that they have no control over the customer experience. They are trying to deliver the customer a driver or a car, but the car can be dirty, the driver can be can misbehave, the car can be filthy. It's not Uber's fault. But in India, they're really struggling to try to deliver a better experience. In the UK, I only use Uber. In the US, I only use Uber. I think it's a fantastic experience overseas. And we love Uber's experience overseas. And BlueSmart is also a class of 2019 on the Uber platform, right? We were born on Uber platform. But we are trying to help Uber in India. They are really struggling because of the business model. It doesn't make sense for depending on drivers who really come from the such weaker section of society. They are not able to maintain cars. They're not able to bathe themselves for 4 or 5 days, forget cleaning the cars, right? So the experience will always be bad. It's not that Uber wanted to. Answering a gentleman's question on scale and fleet size. So Uber's largest electric fleet in any city in the world right now is in London. Uber has about 44,000 cars in London. They have about 66,000 cars in the UK, Scotland, England, Ireland combined, putting 3 countries together. Uber has about 66,000 cars in the UK. In London alone, singular city, they have 44,000 cars. Out of which 7,000 are EVs and 36,000 non-EVs. So in layman language, Uber's largest electric fleet in any city in the world is in London. BlueSmart India. In Delhi has about 5,500 cars and about 850 odd cars in Bangalore. We are almost 90% of the total fleet size of Uber in London versus Delhi, and versus India, we are almost equal. By end of this year, in 2024 December, BlueSmart Delhi fleet will overtake London's Uber fleet and become the largest EV fleet in any city in the world compared to Uber. So that's one. In India, I think the numbers were a little wrong. BlueSmart today, there's 6,000 EVs in Delhi. Ola and Uber combined have about 38,000 cars on the roads of Delhi. But in terms of availability, those cars are not always online. So cars are there, but they're not available, right? So there's a difference between that. Drivers switch on, switch off the Ola Uber app 10 times a day. So at any given point of time, there are only 25,000 cars on the road. So in such a short span of time, BlueSmart today is already 25% of the total fleet size of Ola and Uber in Delhi. And probably the growth curve will meet in 2026 December, when we will be at 30,000 cars and will beat Ola and Uber in total capacity and will become the single largest fleet operator in the largest mobility market in India. Today, BlueSmart is doing about 1.5 million trips on a monthly basis. Ola is doing about 1 million trips a weekly basis. So that also validates and actually corrects the number that we are today 25% of Uber's fleet in such a short span of time. And the next 3 years, we will probably be doing about 1 million plus trips or 1.5 trips per week, given that their scale is falling. Also, a lot of these cars were added in 2016-17 circa, which was pre-Uber going IPO. Post Uber going IPO, they've added only 1,500 cars in Delhi NCR because the driver incentive has dropped incredibly. So we see that a lot of cars are going to get retired hurt or will meet the end of life on the Uber platform in the next 2 years, which is a tipping point for BlueSmart's growth, and will absolutely start looking bigger overnight because a lot of cars are going to get retired hurt since they were added 6-7 years back, and now they're meeting the end of life and no new cars are coming on the platform. So that's, anyways, I tried to keep it short. I could have gone longer. I may not have addressed all questions. but I'm just giving you flavors on how we continue to believe that sooner or later, everybody will figure out this is the right model, although it looks capex heavy, but that's the way forward. You can't build SaaS of bridges or SaaS of airports or SaaS of power plants. You need to make the capex investments, right? So we absolutely not shying away. You need $1 billion to build an airport. You need another $1 billion to build bridges and dams. You need another $1 billion to build road infrastructure, airlines. So we are the infra company, not a mobility company. We also happen to do mobility.
Great. All right. I think that's perfect. Thank you very much. And by the way, we want to also, Punit, thank you for making us available from India, and wanted to thank your Darden avatar sitting here as well for doing that. So thank you very much. And appreciate it.